Hey, good morning, Mr. Rohit and Mr. Korean. So this is Neeraj. So I'm going to be the host for today's Twitter Space. So now, before I start, good morning, everyone, and welcome to all of you to today's Twitter Space from Paytm Money. Today is 1st October, and on this day we celebrate NPS Divas. Paytm Money wishes all of you on this occasion to celebrate this day the best possible way. We have organized this Twitter space so that awareness about this fantastic investment product spreads all over. So NPS is a product investment solution for wealth creation, tax planning, and at the same time for retirement planning. Now, before I start, I'd like to just read out quickly the statutory disclaimers. Investment in securities market are subject to market risk. So read all the related documents carefully before investing. Representations are not indicative of future results. All the discussions are purely educational in nature and are in no way an advice or a recommendation. So today our topic is best investment solution for an Atmanirbhar retirement. So, ladies and gentlemen, today I have great pleasure in introducing our esteemed guest, Mr. Kurian Jose. He is a CEO of Tata Pension, and Mr. Rohit Gyanchandani. He is a managing director, Nidhi Nivesh Private Limited. Welcome, both of you.
Thank you. Good morning to
Good
everybody.
morning.
It's a pleasure.
Thanks, Neeraj.
Good morning,
Thanks a lot.
Rohit.
Good
Good
morning.
morning, Jose.
Yep.
In fact,
Good morning.
today, it's a great pleasure. Both of them are actually authorities in this field. And I would like to say that although I'm going to start it, there are no rules for today. And I request both of you to open your mind and heart out to our speakers so that we can get the best, best out of your experience and knowledge. Right. So anyway, to start with, I'll start with Mr. Korean. Just first question. In fact, when you talk about retirement, over the years, the whole concept of retirement have changed. Now, retirement is in fact a golden period in one's life, and anybody who have got plenty of time, complete financial freedom, he can look forward to have a wonderful life. So, Mr. Kurian, can you please introduce NPS as a product to our audience and how it can play a very, very important role in having a golden retirement? So I request Mr. Kurian to start the whole discussion. Mr. Kurian, over to you.
Yeah, thank you. Thank you very much. Good morning once again. And It's an absolute pleasure to speak to all of you on this wonderful day of October 1st when we are celebrating this as NPS Divas. Coming to retirement, I think what is most important today is the word retirement. I think if you go back a couple of generations, maybe to our parents or our grandparents, the entire onus of retirement was that give your children a good education so that children could kind of get educated, get good jobs, and could take care of the parents or the grandparents. I think in a large part of the country that still continues. A lot of parents, grandparents look forward to this to their children to kind of take care of them in their golden years. But I think gone are those days. We are moving from joint families to nuclear families. You have families moving apart because of job reasons or otherwise. So it's very important that you prepare for a retirement. I think NPS or the National Pension System is a wonderful system which has been introduced way back in 2004, initially for the government services, the central and the state, and subsequently extended to all citizens. So it's a wonderful product. The whole idea is to save now for a time when you will not have regular income. Today is the time when you have a regular income in terms of salary or wages or some sort of income that you get while you're young and while you're working. The entire idea of retirement planning is to have money for the time when the monthly cash flow stops. So NPS, like I said, the entire concept of NPS goes back to, like I said, 2004, when the government wanted to get out of the defined benefit system and move to the defined contribution, purely because they realized that defined benefit is not sustainable. So they moved to defined contribution, and they came about with this NPS product. Like you said, it's a very simple product. The advantage is it helps you save. It helps you save across asset classes. Plus, it gives you tax advantages which hardly many products offer you. So I will stop here for now. And I mean and I will keep adding more stuff as we go along.
Okay, good. ठीक है. In fact, Rohit, over to you also. So if you can little bit dig down, we have got already, Employee Provident Fund, PPF, we already have. So how NPS is structured? Like, what are the pros and because most of the listeners today are okay. I assume that are maybe would like to take down to that detail level. So can you just throw some light, the nitty-gritty, the functioning, how it is different from PPF or EPS and PPF? Over to you, Rohit.
These are,
Rohit?
yeah, can you hear me,
Yeah.
Neeraj?
Yes, yes. Now it's absolutely clear, Rohit. Go
Perfect.
ahead.
So when we talk about EPF, Employee Provident Fund or Public Provident Fund, so these are assured return schemes where the interest rate might keep on changing. However, the returns are assured, and these are technically the fixed income kind of products. So what NPS gives you is a flexibility of allocation towards equity, also at a very low cost, which EPF technically they have a mandate to invest, but the returns that you are given are assured. However, NPS is completely market links. So you can expect higher returns from NPS in a longer term. That's one. Second, very important aspect is that not everybody can go ahead and have an EPF account. So let's say if I am a self-employed person or if I am into an unorganized, workforce, then I cannot have a EPF account, but I can definitely have an NPS account. So if you are a self-employed businessman, you can definitely have a NPS account. Of course, goes without saying that as we discuss further in this space, there is a lot of flexibility that NPS would offer. To tune in your equity allocation or debt allocation and so on and so forth. So I think NPS is a very very wide product. It's not a narrow product like very simple like EPF, but in long term, the return perspective of NPS would be great.
So when you were saying wide product, can you just throw some more light into it? So how can we say that it's a wider product and what are the things?
Right. So wider in terms of eligibility also, like I said, employee provident fund only employee in the organized sector can have it. Unorganized employee, somebody who is not into an organized company, where EPF is mandatory, cannot have the EPF. Uh, with respect to wider mandate of investing, where NPS can invest, you in fact an investor can decide where how much money or how much of his money can go into equity, how much of it can go into corporate debt, or how much of it can go into government debt. So that flexibility
Oh,
gives a great option as an investor also.
yeah. In fact, again, Rohit, I'll be taking this question to you only. In NPS, like there's a tier one and tier two kind of thing. So many times people get confused, like what is the difference between both? So which is mandatory, which is optional, how to start with. So if somebody who has not yet having a who does not have a NPS account as yet, so what should be the approach? What is the first thing that he need to do? Where he should go to open his first NPS account?
Perfect. So see, tier one account is completely mandatory. You cannot have a tier two account. Tier one account is mandatory. All the tax exemptions, tax benefits, tax breaks are only and only applicable to tier one account. Okay. So whatever you want to contribute for tax deductions, you have to do it into the tier one
So,
account.
so Rohit, it means sorry for in fact the MPS whole system is there are two part, right? One is a tier one and one is a tier two.
That is correct.
Yeah.
Yeah.
Okay.
So tier one is mandatory. Tier two is something like a savings account. Okay. So there's no tax benefit attached to tier two account. If you contribute some money to tier two account, there is no tax deduction or exemption, so on and so forth. You can withdraw your money anytime. There are no lock-ins to the tier two account. Okay. So it is just like your a basic savings account where, of course, when you invest, you get some equity exposure. When you withdraw, you can withdraw it anytime, but there are no tax breaks. So that is the major differentiation between the tier one and tier two account.
Okay. 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 Great.
Acha, to just
The-
to add, you cannot
Mhm.
have only a tier 2 account. It is mandatory to first have a tier 1 account, and then you can have a tier 2 account also.
Okay. Now, I'd like to ask Mr. Kurian about Tier 1 account. So I'm sure your Tata Pension is very active in NPS thing, NPS accounts, right? So can you give some more light, throw some more light into Tier 1 accounts? So how one can take advantage of tax benefits? What are the different clauses under which he or she will get the tax benefits? And of course, the different investment options. Can you throw some more light into Tier 1 kind of system?
Yeah, sure. Thank you. Thanks for the question. Yes, this is a very interesting aspect of this whole idea of NPS. Just before I come to tier one, I just wanted to just build on what Rohit mentioned, and I mean, and the question of whether EPF, whether PPF, whether NPS. I don't think it's an either or situation. PPF offers you a guaranteed return, but because it's a guaranteed return in nature, the entire underlying is fixed income in nature. So that has its pluses. But having said that, the NPS, what it offers you is that you can kind of decide what kind of equity opportunity you want to invest in. Similarly, in EPFO, under EPFO, you have various categories. So you have a cat 1, cat 2, cat 3, cat 4, and cat 5, where it gives you a limited amount of equity that you can invest, 5 to 15%. And the decision of 5 to 15% in EPFO depends on the trustees, and it doesn't depend on the citizen who's investing. So what NPS does is it has a tier 1 and tier 2, and like Rohit rightfully mentioned, tier 1 offers you tax benefits, and I think that is the best part of this entire system called the NPS, the National Pension System, that it offers you investment opportunities, it offers you low cost investment, it offers you professional fund management, it offers you an ASP at the end of it, and it offers you to kind of calibrate the amount of equity investment that you would like to do. So coming to tier one, for all citizens, you have four categories, if I may say so. It's called E, C, G, and A. E is equity, C is corporate bonds, G is GSEC, and A is alternatives. So equity, depending upon your age, it will allow you to invest up to 75% of your corpus into equities. So that's, I mean, there is a difference between active choice and auto choice, which maybe we can take it up later. But the entire idea of the whole thing is that you can go up to 75% in equity. That number comes down by almost 2.5% once you have crossed the age of 50. So when you're starting young, and the entire concept of retirement is start young, because finally, like Albert Einstein once stated, compounding is the eighth wonder of the world. So for compounding to really kick in, you need to kind of come in early. You are able to see the advantages of the entire thing once you start early. So the entire idea is start young, benefit from taxation, benefit from the equity allocation. Obviously, you have an option of keeping your equity allocation low as well. It offers you various opportunities of, like I said, there is an auto cycle and there is an active cycle, where if depending upon how conservative or how aggressive you are, you can pick and choose what kind of equity exposure you have. So NPS allows you to pick and choose how much equity you want. The PPF doesn't allow you that. EPFO, the trustee who manages the entire money, allows you, takes an action behalf of the employees. And as Rohit rightfully mentioned, the NPS, or tier one and tier two, is open to all citizens, NRIs, and all Indian and NRIs as well. Whereas EPF is open only for salaried personnel.
Great, great. In fact, we have started receiving questions from our participants as well, and in fact, I request them to keep posting questions so that the discussions can be very very interactive. So Pankaj is asking a question. I'll take it to Rohit. Pankaj, what is corporate NPS?
All right. So, see, when we talk about tax deductions, okay, so tax deduction, first section that you have is section 80C, where 1.5 lakhs per annum can be contributed, and that you can take as a tax deduction. Another one is 80CCD1, which gives you an additional 50,000 that you can invest in NPS tier 1, and you can claim that as a deduction. But that's not all. So if you have a corporate, so let's say your employer, he has a tie up with the with the NPS, he can contribute on your behalf 10% of your basic salary and dearness allowance. So, for example, I'll just give you a raw example. Okay, let's say he's going to pay you 1 lakh rupees in your bank account, but instead of doing that, 10% of your basic and dearness allowance. So, forget dearness allowance, let's say 10% of your basic, let's say 5,000 rupees, he does not pays you and he contributes directly to the corporate NPS account. Okay, so then he'll give you 95,000 in your bank account. Now that 5,000 rupees, which otherwise you would have received in your bank account, but is now into the NPS through your employer, is additionally deductible under section 80 CCD subsection 2. So 1,50,000 under section 80C, another 50,000 under section 80 CCD 1, and another 10% of your basic salary plus DA uh, is contributed through employer is deductible under section 80 CCD 2. So when you talk about the corporate NPS, the section 80 CCD 2 is the one that gives you additional deduction.
Wow, I think this 80 CCD 2 part, I think I was not aware of, but it's a great for me as well. I'm sure Pankaj, you got your answer, right? So again, there's another question. This is again with respect to choice of fund, from Gujor. So he's asking like NPS tier two, the best and cheapest balanced fund. Would like to, I don't, Mr. Jose, if you can answer that question, or if
Sure.
you have got some questions from your Tata fund, you can also say about that.
No, 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 fair enough. So I'll just answer that question. Like I said, tier one is the one that was, if the entire idea of tier one is to ensure that we save, and the entire if you look at the entire space of saving, there are a lot of players in the market which are offering you solutions for saving. NPS offers you the uh, uh, additional what should I say, parameter when the entire thing is EEE. The entire thing is exempt, exempt, exempt. When you invest into the category, it is exempt. When you during the category during your stay in the NPS product, it is exempt. And when you take the money out, 60% of the money when you take it out, which you can take back as a lump sum, the entire amount is tax free. So all those possibilities are possible with tier one. Coming to tier two, like Rohit rightfully mentioned, there is no tax advantage. But why? Everything is not about tax advantage. You have to look at investments also. An investment, NPS tier 2 offers you the investment at the lowest cost. And again, you have the ECG there also. You can invest into equities, corporate papers, as well as government papers. It's the lowest cost. You can pick and choose your equity and your debt allocation, like it's equivalent of a balanced fund. But yes, no tax advantage that you get over there. But you get the best of the fund manager managing the money. You get to allocate the money to the fund manager depending upon your choice of equity and debt. A balanced fund in the mutual fund parlance, the fund manager decides how much equity and how much debt. In NPS, the subscriber gets to decide how much equity and how much debt. So yes, you are absolutely right in what you said. Tier two offers you the that opportunity to select how much equity, how much debt is good for you, and the fund manager manages the money as per your mandate.
Great. Can I modify my contribution after opening T1 after some time?
Sorry, come again.
This is a question from Biswa. He's asking, can I modify my contributions
Oh
after
yes,
opening T1
yes, yes,
Tier 1
yes.
account? Yeah.
Yes, yes, absolutely. So you can. So once you open your tier one account, like I mean, the entire idea or how you come into the NPS system is that you have to open your tier one account, and the amount that has to be put is very very small. It's not that you're committing for the rest of your life. You can add any amount of money. You can stop allocating, but of course there are terms and conditions of how to keep the account alive. So yes, you can pick and choose how much you want to invest into the tier 1 and tier 2. And yes, there is another feature that has recently been included, which is called the deremit. So it gives you a lot of opportunities of investment. I mean, I think NPS has been evolving over the period of time. It has learned from a lot of practices worldwide, and with other retirement solution providers, and I think it's added a lot of features. Yes, you can modify your you can select how much equity, how much debt, how much corporate paper, and four times a year you can reallocate between these four ECGA. As I said, A is alternate investments. Four times a year you can modify your investments between these four opportunities without a tax incidence.
Wow, 4 times a year. You were
Yes.
talking about some alternative AIF. What is that AIF?
So AIF, NPS allows up to 5% of your corpus to go into AIFs. So like I said, equity you can go up to 75%, corporate you can go up to 100%, GSEC you can go up to 100% again. AIF is the alternate space, which but the NPS restricts it to 5%. Now under alternates you can invest into REITs and InvITs. So this is a new
Okay.
opportunity where primarily investments usually has been done by banks, PMSs, alternate investment funds, mutual funds, mainly alternate investment space. So through this 5%, you can invest into REITs and InvITs as well.
Okay, great, great. In fact, we have been discussing about some choices, Rohit, I think next question will go to you. We're talking about auto choice and active choice. So can you throw some light? Because it's all about choosing.
Right. So, see, the word itself will, suggest what it means. So, what is an active choice? Active choice basically means that you, as an investor, can decide the proportion of the amount that should go into equities, that should go into corporate debt, that should go into G6, and that should go into alternate investment. Now, alternate investment and equities have a slab, higher slab. So, equities you cannot go beyond 75%, and alternate investments you cannot go beyond 5%. So that is the active choice. Keep in mind that even in active choice, once you reach the age of 50, once you reach the age of 50, every year 2.5% of equity will fall. So for example, if you are 51, then your equity will be automatically reduced to 72.5%. If you are 52, it reduces to 70. Okay,
Okay.
so that
Hmm.
is active choice. Now auto choice is a little bit complicated, but there are three things: there is moderate, there is aggressive, and there is conservative. So depending upon the age, there is a table which you probably Paytm Money can share on their handle, where from there are age. So for example, up to 35 years of age in an aggressive cycle fund, equity is 75%, corporate debt is 10%, and GSECs are 15%. So let's say if you take it to 55 years in an aggressive cycle fund, okay, 15% is equity, 10% is corporate debt, and 75% is GSECs. This is automatically done, and a subscriber does not have to do anything. Based on his age, all these things will be taken care of automatically.
Okay, great. So again, Vishwa is asking another question here. He's saying, can Indian citizen have two pran, that is APY, example, for example, APY and NPS? Can you please clarify? So I'll take this question, Mr. Jose.
So one, you only need one pran. It's like you only need one pan. So you only need one pran. You don't need more than one pran. Pran is a permanent retirement account number. It is completely portable. When you move across organizations, you take your pran with you. There is no requirement for a second pran. As far as I'm aware, you can have only one pran, unless Rohit, you have another view.
Yeah, no, Mr. Kurian rightly pointed out the PRAN you have to have only one. But if you, there are certain eligibility criteria I can't really recall right now, but you can have both Atal Pension Yojana as well as NPS. I'll have to check that, but PRAN absolutely you have to have a single one. It is portable when you switch employers or so on and so forth. You can take it with you.
Just one more thing to Rohit. The Atal Pension Yojana has been discontinued for citizens. It is meant only for people below the poverty line. The Atal Pension also offers you. I mean, it also offers a feature where the government also contributes, but it is applicable to only people below poverty line and not to everybody. So I'm also
Right,
a
right.
little I mean, I wouldn't be
No, that
completely
is
informed on
correct.
APY, but yes,
That
but
is
as far as
correct.
NPS, it's, I think there's just one pran or pran. I'm sorry, I stand corrected if it's pran.
Pran. Yes.
Fran. Okay, okay, okay. Chal. In fact, we have been receiving lots of questions from our participants and I really appreciate that they're actively participating here. So here is the next question from Veena. She says, I am 40 years old, and I want to start my NPS account. Please guide from the scratch. So whoever, Rohit, would you like to go ahead?
Yeah, sure. So, opening an NPS account is fairly simple. Very basic documents are required, and you can just, go ahead on NPS websites, nsdl.nps. There's a website. You can simply go ahead and open the account and start contributing. It is very simple. The process is completely online.
Okay, but where she has to go there only, she has to go somewhere again.
Ha. No, NPS directly she can go. There's no problem.
Okay.
So
Uh,
it can be done. You can either go through an so you have, like I mentioned in NPS, the very interesting concept of NPS is it's a complete open architecture. So you have PFMs, pension fund managers, who are supposed to manage money. There are POPs, which is point of presence, who are supposed to raise the money and guide the investors and subscribers accordingly. So you have the opportunity. You have two options. Either you can go to a POP. A list of POPs can be found on the PFRD website or the NPS website, or you can just Google it. It's not difficult to find. Or you can go, like Rohit rightfully mentioned, you can go online. You can go through the three CRAs, which is NSDL, CAMS, and CARVI, and you can choose to do that also. So you have various opportunities. It is very simple. It's completely digital. There is absolutely no paperwork as such. If you have your PAN and your Aadhaar, it's complete, and you need your photograph, which is again digital, and a signature, which can be a wet signature, which of a scan of which is required. So it's a completely digital journey. It's very very simple. Age doesn't matter, 40 or 20, as long as you put money away for a rainy day. I think it's a great idea to invest into NPS.
okay, great. Now here's another question from Utkarsh. Can 50-year-old pension person enter in NPS with 50 lakh rupees and get pension? Uh, Rohit?
Yeah. So, yeah, absolutely. I mean, age. There is so by going by the age, yes, 50 person can get enter into it, and yeah, why not? He can start having the pension. I mean, there is this option. You have to stay till the age of 60. So that's when the superannuation happens, and post that you can withdraw that money. 60% is available to you tax free, and then 40% you can 40% you can convert into annuity. That's possible.
Yeah,
Okay,
just adding there, like the gentleman mentioned, coming in at 50, whether it's prudent. Yes, it is. You have the optionality of taking your money out 60% if you require it, but you needn't take it out at 60 as well. You can extend it to a much, if I'm not mistaken, up to 75. You have
Correct.
an optionality of buying an annuity with a larger portion. So pension is basically buying a annuity product from a insurance company, and which gives you income based on what that annuity product kind of gives you. So age is not a criteria. The earlier you come in is the better from the compounding point of view. But 50 is a good enough year to come in, because India is still, I think, the social security system is still at an evolving stage. So age doesn't really matter. You can come in with a lump sum. You have an option of buying an annuity with the entire money, or taking 60% of that money out if you require at the age of 60, and the remaining money goes to buying your annuity.
okay, great. I will be taking lots of questions from our audience participants today. So next question is from Yash. He said, can 80CCD1 and 2 claim simultaneously? Can we have both corporate and private NPS account?
Yes.
Yeah, Rohit, go ahead.
Yes, you can have it.
Okay.
80CCD1, 80CCD2, both you can have it. That's the beauty of it. So 80CCD1 is voluntary. You have to contribute from your bank account. Employer is not involved. And 80CCD2 is through the employer. So you definitely can do both ways.
Okay. So
See the
many.
advantage. Sorry, Neeraj, cutting you in here.
Go ahead.
The advantage of this whole thing is, like Rohit rightfully mentioned, there is an ATC which everybody knew that was up to 1.5 lakhs. But that 1.5 lakhs was pretty much consumed by your tax savers, your your children's education, your PF, your money borrowed to buy a house. So that 1.5 lakh was pretty much consumed very fast. Then
Hmm.
NPS came with the 50,000 bit, which was
Hmm.
specifically for NPS, which is the ATCCD
One.
one,
It is
if I'm not mistaken. But the third part, which is the ATCCD two, I think. So
Yeah.
that offers you, if you come in through corporate pension, 9.5 lakhs per annum becomes tax free. Now that's
Oh.
a huge amount. There is no, I mean, I'm talking from a salaried person, and I my
Mhm.
heart bleeds because of the amount of tax that I need to pay. But
Oh.
thanks to this, 9.5 lakhs of money becomes almost tax free. And thanks to the tax free, I am forced to invest that money, which otherwise I may not have. So one, I get the tax advantage. Two, I force myself to invest. Three, I can invest across asset classes as I choose. I'm not dependent on somebody to select my asset classes. And four, yes, when I retire and I can choose to retire. I mean, the withdrawal part comes at 60. I can push it to 75 also. And as and when I need an annuity, I can buy an annuity, and the price of the annuity is also capped by PFRDA. So it's an amazing product. It allows you. I mean, the entire system, the pricing is capped, and you are not at the vagaries of other providers. The entire thing is capped. It's an amazing opportunity that you get. You get tax, you get investments. You are forced to invest, which when you need the money, you'll be very happy that you were forced to invest.
Wow, I'm really happy actually, Mr. Kurian. I'm also quite new to this system, and I'm really excited. 80CCD too, and I think it's really really quite useful to all our listeners. What we are learning here today. Thank you. Many a times, people think that tax saver mutual fund is better option than NPS. Sometimes, what is your opinion, Rohit?
Right. So see, working as a financial advisor, I'll tell you, openly how how I look at it.
Yeah.
So tax saver mutual funds, the mandate is to invest minimum amount of 80% of the fund into equities. That's minimum. Okay. Most of the tax saver funds that I know are upwards of 95% into equities already. The lock in period, or the period of where you cannot withdraw money in tax saver mutual funds is 3 years. Okay, when you compare it with NPS, you will see that there are a lot of advantages that ELSS or a tax saver mutual fund has, but I don't believe that that is a correct comparison. See, NPS is a very very long term product, a very very low cost product. Okay,
Hmm.
so if you simply compare it with the, see how the world compares it is by having a lower lock-in and a higher equity. So higher equity does not necessarily mean that it's great because it has a 3 years lock-in. Equities is not a product for 3 years any which ways. So there could be a speed bump where at the end of the third year equity has not performed well and you receive very low returns. That's possible. Okay, so I believe both of them have a fair bit of pros and cons. Okay, any which ways 3 years is not a great period of lock-in for equities. It should be at least 5 years. That's my personal opinion. So NPS is low cost. NPS is relatively stable, so to say, than a ELSS fund. But yeah, it has a higher lock-in, so that is where an ELSS fund would score.
Okay. So again, the next question is from Pratyush. He said, "Should I invest lump sum in NPS?" Kurian, you can take it, Mr. Kurian.
Yeah. So I mean, again, that's like $1 million story, and I have been in the mutual fund space for 21 years now. So if you ask me, when I wear a mutual fund hat, we never really advocate that lump sum is a right way to invest. We always say that SIPs is a way to go, which is invest systematically. If you have a lump sum, you should put money into a liquid fund or a debt fund and do a systematic transfer plan. But that's a different entity, which is mutual funds. Wearing my mutual fund hat, I would never be committed to put lump sum. It always makes sense to invest systematically, either through an SIP, which is systematic investments, or systematic transfer plans, which are STPs. So the idea would be, you could put a money, like I said, everything finally comes down to asset allocation. You cannot put all your eggs into one basket. You should never put all your eggs into one basket. You should
Hmm.
have different asset classes. You should have debt. You should have equal. You should have amounts of debt. You should have amounts of commodities. You should have amount of equities. You should have some amount in AIF. So NPS offers you all the opportunities. The selection of whether you should go lump sum or systematic, I would I mean, I think you should reach out to financial advisors like Rohit. I wouldn't, if you ask my personal opinion as a mutual fund player from a long repute, I would suggest to invest systematically than lump sum.
Okay, okay, okay. So, okay, so I will take this next question to Rohit. Rohit, Mr. Teja is asking this question. I am contributing 10% of my basic salary to NPS. Looks like I get tax deduction under 80 CCD2. Does that mean there is a scope for additional 50,000 deduction, and how to avail it?
Absolutely. So see, these are three different sections. Okay. Like I said, 80C 1,50,000, you have to do it from your own. 80 CCD 150,000 that you are talking about, the current question is talking about, again you have to do it on your own. And the 10% that we are talking about, the corporate NPS, that is 80 CCD2, that your employer has to do, has to deduct from your salary and contribute it. So that 50,000 additional, you have to do it on your own and you can claim that, deduction. Mr. Kurian said, I'll just break it down because I on my personal DM I received that how 9.5 lakhs. I'll just
Mhm.
break it down. You can avail a maximum deduction of 9.5 lakhs. How? So 80C 1 lakh 50,000, 80 CCD 1 50,000, and 80 CCD 2 7.5 lakhs. So that is
Mm.
how Mr. Kurian came to 9.5 lakh. Anybody who had that doubt is now clarified. So
Fantastic.
50,000, yeah. So 50,000 is 80 CCD 1 that you have to do on your own. That is separate from 10% of corporate NPS.
Okay, okay, great, great. Again, you can answer this question as well. This is from Amit. Hi, in case of death of PRAN holder, how can his or her family members or nominee claim the invested amount in NPS?
Okay, so yeah, so again, this is a procedural question. There is a procedure of filing the claim, the nomination form, the indemnity affidavits, and all those things. That is available on the NPS's website. Those are fairly simple forms. Once you fill it and they are submitted, the money gets credited to the subscriber's nominee. That is how it works. Fairly easy process.
Yeah, and just adding to Rohit, at the time of investment, when you create a PRAN, you anyway add a nominee, so that so automatically goes to the nominee. And I think yes, like Rohit rightfully mentioned, the process is pretty straightforward. It's available on the NPS websites in their FAQs or the PFRD websites. So the process once followed, you should be able to get the money.
Okay, okay, okay. I think good. And I really appreciate all the listeners here today. They have been posting lots of questions, and we'll try our